Sea Limited, and ticker SE, is scheduled to release its Q4 2024 earnings result on the 4th of March 2025 Tuesday before the market open. So the consensus estimate for revenues, right, is expected at $4.84 billion, which will suggest a year-over-year growth of a 35.79% if compared to the same period last year. So the consensus estimate for the fourth quarter earnings, right, is expected at 62 cents per share, which is a significant improvement as compared to a loss of 19 cents, right, with the same period, quarter period 1 year ago. Sea Limited, right? Last earning call, right, was positive with a positive sentiment, and this has given the investors, right, a 30.59% change to the share price. So the call actually highlighted, significant growth and profitability across all their business unit sub-segment, with a strong performance metrics and then a significant advancement, right, positioning the company for continued success. So despite the slight increase in the marketing expenses, right, the overall outlook, right, remain pretty robust. This is why the earning costs turn out to be positive. So during the call, right, the C management also provided a very optimistic um, guidance, which actually highlighted a significant year-to-year growth, right, across the three main business segment, which Shopee, right, is on track to actually achieve a mid-20 year-on-year GMV growth. So, and also now coming to the financial services C Money, their loan book, right, also expanded over the 70% year-on-year with a stable non-profit performing loan ratio of 1.2%. So Garana actually anticipate the Free Fire game, right, booking to increase by over 30% year on year, and Shopee also achieved a positive adjusted uh, EBITDA in both Asia and Brazil, reflecting a improved profitability. So the C, right, reported a 31% increase in total GAAP revenue and a 4.3 billion, and a leap of a total adjusted EBITDA to 521 million. So the e-commerce segment, right, actually saw a 25% rise in the GMV and a 43% increase in the marketplace revenue. So digital financial services actually grew by 38%, and then the digital entertainment booking, right, actually jumped by 24%. So C management actually emphasized that there is a continued growth in user engagement and financial services expansion. So positioning C, right, for sustained profitable growth. So SC has multiple core segments, which we have seen the last earning calls that they actually touches on this core segment. So this segment actually is the so-called major earnings contribution to the revenue as well as the earnings. So important for us as investors, right, to look at these multiple factors that could be hitting these core segments, and this would affect the earnings amidst a broader market environment. So coming to the segment performance, so coming to Shopee, which touches the e-commerce. So the growth driver, right? So in Q3, Shopee at GMV actually grew by 25% year on year, and Q4 typically would benefit, right, from the holiday sales and the year-end promotion. So Shopee ability to maintain or increase market share, right, against the competitors like Lazada and Tokopedia, right, will be critical. So improve logistic and cost efficiency would be something that I will be looking at that could boost margins. So Shopee actually achieved a positive adjusted EBITDA in both Asia and Brazil, with Brazil achieving a break even on a adjusted EBITDA basis for the first time in the previous quarter, the Q3 2024. So I'm expecting this to come back again, a positive adjusted EBITDA. So another area we're going to look at is the risk. Okay, so the high marketing spend, right, during a peak season, especially the holiday season, this might pressure their profitability, and macroeconomic headwinds. I think inflation is creeping back from some of the economic data that we've seen. in the last Q4. So reduce consumer spending. Yep, that might be reduced computer spending in Southeast Asia as well. These are the thing that might dampen the growth for Shopee. So now moving on to the gaming side, which would be something the we will be looking at is like Garena. So in Q3, right, Garena Free Fire booking, right, actually grew by 30% year on year. So success of a new game, right, releases and updates to Free Fire could actually help to revive their user engagement. So diversification beyond reliance on just one single title would be a positive signal to look at. Because in Q3 itself, right, Free Fire actually has over 100 million daily active users in Q3, and with a 25% year-on-year growth, right, and was the number one most downloaded mobile game globally per sensor tower. So what is the risk that we could be looking at? So the risk could be a stagnation in the game development or regulatory bans. This bring us to the past issues in India. So this may impact the booking. So the gaming sector cyclicality, right, could also play a part in terms of risk to their gaming sector in Garena. So okay, now next, coming to the SeaMoney in the sector performance, which cover the digital finance, right? So the growth driver that they did quite well in Q3. SeaMoney loan book actually grew by 70% year on year. Expansion of the financial services, right? Example, loan and insurance, right? And also increase the adoption of the digital wallets in underbanked regions. So partnership with local merchants might also drive the transaction volume. So the digital financial services GAP revenue, right, actually rose by 38% year on year, with consumer and SME loans, right, the principal outstanding actually reached $4.6 billion. So this actually represent a 73% year on year increase. So coming to the risk on their digital finance, so one thing that is important is the regulatory synchronization, synchronity in the financial services and competition from established players like GrabPay or OVO in sector like Indonesia and basically Southeast Asia as well as the uh, South America. So now, okay, let us move on to the next major factor to look at is the strategic and the macro factor. So one of the thing that is important is the profitability focus, because now I think we are looking at Sea Limited, like shifting from a growth at all costs to a cost discipline, which is pretty evident when it happened actually in 2002, starting from 2002 to basically 2004. So this may continue, potentially stabilizing the EBITDA margins. So in Q3 itself, we can see that the sales and marketing expenses grew by 13% quarter on quarter. So slightly, this has impact the profitability. So this is an area where we as investors might look at on how the Sea, right, is managing the expenses and costs. So in Q3, the total gap, right, revenue actually increased by 31% year on year to 4.3 billion, and the total adjusted EBITDA was actually 521 million compared to 35 million in Q3 2023. So if Sea will be able to show a significant cost discipline, and that might be a potential earning surprise if they were to really able to bring down these sales and marketing expenses, because I think the last one they actually had 13%. So the next area we look at is the competition. So intense rivalry in the e-commerce space, right, and then also the fintech space, right, would erode the Sea margins, especially if the price war escalated. I think we can see that there is already happening from Tokopedia itself. So yeah, next one we'll be looking at the regulatory environment and then the currency risk. So changes in data privacy and then digital tax policy and gaming regulation is also key in the key market like Indonesia and Brazil may impact the operation. I believe that they have participated in some of the data privacy or so-called the protection against scammer in Singapore itself. So Another one, it would be the exposure of the emerging market currency, example the India rupee as well, rupiah, sorry, and then the Thailand baht, and then the Brazil lira. So could lead to the FX volatility, and this could affect their reported revenue. Now coming to actually the investor expectation, right? Actually, very much depends on how C ability to actually balance their growth and the profitability. So positive surprise, right, in their user metrics, GMV, and then the active user and the margin expansion, right, could help to see the share prices going up. So, but then in the misses of the revenue guidance and weaker than the expectation, gaming booking may trigger a sell-off. So based on the 8 Wall Street analysts offering a 12 months price target for C, right, in the last 3 months, data taken from tip ranks. So the average price target, right, is actually 138.96 with a high forecast of $157 and a low forecast of $130. So the average price target, right, actually represent a 9.19% from a change of the last price as of last Friday, $127.27. So I would think the investors may have a good sentiment considering the improvement in the Shopee and DFS services user engagement, but we will still need to see how C able to balance this and continue to see a continued growth. So, but the C expenses, especially in the sales and marketing, might be a concern to some investor. So this is another area that I'll be looking at. I'm hope that they can improve it because the 13% is a bit high. So it can go down lower. I would be able to see that C, right, could be trading around the $132 and the $135 range post earning. Now we will look at how the technical analysis using the exponential moving average EMA as well as the relative strength index RSI to look at how it will be, the price will move on a different scenario for the earnings. So from the technicals, right, we're actually seeing the C, right, trading rather sideways now since this is last week. So despite the market sell off, right, we don't see much going down. So I believe there's a good attempt for the bull, right, trying to clear the 12 EMA, which actually it did on Thursday, but then it failed on Friday, though it has not been very successful. So but I believe the bull, right, will continue the daily uptrend expansion. It could be possible if, let's say, we can see posting a better than expected revenue, as well as the cost expenses actually reduce. So as we can see, another thing that the momentum, we also need to have a good momentum from the RSI. This that to show us that there are buying sentiment, which I think today, Monday, is something that I'll be looking out for. So these are the two area that I'll be looking at, how it would be affecting the earnings for C. Let's say if I were to go back to the weekly, right, as you can see, same thing, weekly is pretty good, they are above the what, and then there is a so-called overall strong momentum, but coming to a daily, so this is critical because it's very near the line of the 70 line on RSI. So okay, so now I will be looking at two scenario. One of the bull case scenario, if let's say Shopee able to sustain a double-digit GMV growth, right, and Garena launch a new hit game, and C Money are able to achieve profitability, this will help basically to push up the share price, as well as macro condition stabilize, and then this will basically improve the discretionary spending from consumer. So these are bull cases that will help to push the price well above into the 140, 135. So what happens if, let's say, a bear case? So there might be competitive pressures that will squeeze the Shopee take rate, and Garena user base, right, actually decline, and the rising fintech regulation actually limit C money expansion, especially in the Southeast Asia side. So Another one will be the currency depreciation will further hurt the earnings, especially when US dollar strengthen, and then Indonesian rupiah and then the Thai baht may depreciate. Coming to summary, so analysts actually generally anticipate the Sea Limited, right, to report a strong growth across its key segment: Shopee e-commerce, Garena digital entertainment, as well as the Sea Money, which is cover the digital financial services. So while specific Q4 2024 result are unpredictable, right? So Sea performance will likely hinge on their execution on the e-commerce monetization, gaming innovation, and then the fintech penetration. So as investors, right, we should be able to gain some so-called hint, right, by monitoring the pre-earnings guidance as well as a regional economic indicator as well as the competitive dynamics. So today I'll be watching the stock price movement quite closely. Though historical trend normally suggests cautious optimism if the cost control persists, but then the risk around the competition and the macro fragility remain the key point, right, for me to watch. So where there is a general expectation of an increased profitability, right, I would think that investors need to pay attention on how the cost control has been working. Please like, share, and subscribe to this channel if you find these articles useful. Disclaimer, this video is actually used only for technical education purpose. The result does not promote or recommend any investment or trading action.